Hello guys, glad to have you on board again today. We'll get back at work after those few days off, and probably first in history for me that I've been entirely off, like not even having a look at the charts for just few days. And yes, that was great. So I'll eventually do this later on. But anyway, the thing is that all my scenarios was pretty much already set it in motion, so I didn't really needed to have a look at the charts. Just basically I put in some stop losses and just said, all right, let it go, not even having a look at this, and that was good. So anyway, I couldn't have done that more than just a few days, obviously. Still have some money in the market and not just pennies, so I cannot just stay the fuck away and say we'll see. All right, at some time risk management is something that you need to shift to balance on a day-to-day basis. So anyway, we're going to try seeing what I'm going to be doing right now. As I just came back, I already performed just a few actions earlier today. I'm going to try explaining them. We also have a new monthly candle close, so we're going to talk about this one. We also have a quarterly candle close. We're going to hold this one for tomorrow. I think we'll plan this for tomorrow. Normally we'll be doing something like that, like tomorrow is going to take care of long-term investments, like quarterly basis trades, and here we're going to have a look at just the monthlies, just to see what it looks like. So once again, monthly, not necessarily a bullish engulfing, but close to it with the Wall Street market. So any bearish signal is instantly bought out with the Fed, with whatever. So they're talking with a purpose. The purpose is clearly to put the bears away. Anytime they are in motion, we need to flush them out. Right? The bear is just a very nasty speculator who is, for now, right. I mean, I'm sorry to say that I was bearish because I thought the macroeconomic will deteriorate and that the price will obviously follow, but the problem is that we do have the deterioration, we don't have prices following. What we have instead is price acting pretty erratically, both bullish and bearish, but with still this stupid confidence that the retail traders are putting in Trump by buying a shit ton of ETF. So there's still the same old problem. We do have historical highs on ETF volume. Once again, it's been months that since they've been doing this, but now the stock market still feel like we're following those guys, like the guys who don't even know a goddamn shit about the market. Now they might be eventually right. So we'll see. I wanted to do this monthly review because I think once again in here it's all about context assessing, which is always the case when it is about how you orientate your portfolio regarding what we have. Don't worry, we're going to take care of cryptocurrencies right after. It's just that I think in a midterm to long-term perspective, like monthly closes, we've got way more interesting stuff in here than we do have with Bitcoins, even though the monthly candle close on Bitcoin is pretty fucking ugly. We'll see this one right after, all right? So it's just to talk to you about the SPX, because I think this is one of the most stunning charts I've ever seen. I mean, this thing is not even a market to me anymore. It feels like we have some dark shadow forces. It is not even dark shadow. I mean, they're acting in plain sight. It's like it's the triad, the plunge protection team. Like, this thing will never go down because we decided it won't. I mean, just think about it. Anytime it's been said like that in the past, it always ended up pretty fucking ugly. So, do you think this is going to work out this time? I don't nearly even think it will. The question is, the context itself is freakingly different. It doesn't even come and goes along a potential bubble to set itself. Does that mean it won't happen? Obviously not. But in a technical speaking manner, I mean, monthly fucking charts is just saying bubble. No way, it's not going to come over. I don't nearly think it's possible. So let's show up why, because I think it's important. I don't remember if we've done that already, but we should have anyway. So as you can see, a bubble always sets itself as a problem when a trending structure goes out of control. It's exactly what's been happening back in the days, like bam, 1970 crash, but instead of crashing the market after this irrational exuberance, then we go back up, and what it feels like is that we should go down. I mean, this should have been a freaking red flag, like, oh my goodness, no, we're out. But look at how prices were reacting back then. Just use a replay and you'll figure this out, right? 1987, And basically, let's be honest, the day I was born, I don't know if I was meant to be a trader or not, but I basically born the day the market crashed in 1987. 19th of October is my fucking birth date. And 1987 is my birth date as well. So the thing is, yes, that's what happened back in the days. The market went pretty fucking dangerously, erratically, stupid. It ended up with a nasty crash that you all heard about. All right, bam. But look at that. Back in the days, what we had was a crazy fucking irrational exuberance. We had unfolding context boxes, monthly fucking charts, so not just tiny charts. All right, this was pretty significantly concerning. The thing is that following on from this, what do you trade? You trade the dead cat bounce and the speculative crash out. That's what should have happened back in the days. But instead, we had this market recovering. Right? I don't even remember what was happening back in the days, but still, the market reactivated, all right, from this irrational exuberance. The problem is that what it caused afterwards is the sentiment that bears are wrong, all right? They might have been right in here, and everybody was surprised with this, all right? But it acted like a pullback, which means as we flushed it out, instead of crashing it out, it said, all right, you know what? There's no bears, so let's go. That's the problem. Bubbles create themselves when the bears surrender. They don't create themselves because we got crazy fucking greedy bulls. Every bubble builds itself out of this simple thing. The bears going out. They just think it's not worth it to sell. Even though buying and selling is just absolute normality in a market is made of buyers and sellers. Some people get in, some people profit take, some people get out, some people short sell. That's the whole thing that builds the market. Whenever things get out of control is when we just lack of one of those two. Or they even disappear, which means in here the bears were significantly lagging behind, and here they just literally disappeared to create this speculative crazy shit. All right? What we have today is pretty significantly different in terms of structures, all right? We've been unfolding boxes in here just one time, not the time afterwards. If we were in a bubble, we would have been way more than that. So, we want to create a bubble in the US. Oh my God, you got to do way more than that. And we're pretty fucking irrational at the moment already. So, does that fit the bubble creation kind of structure? I would say no. No. To me, it doesn't. To me, it's just a trend that is pretty fucking liquid, which means very much QE-like and stuff like that. Lots of liquidity brought in, but still, does that look like a bubble? No, it isn't. To me, I don't see this market going bubblish. In a technical speaking manner, I see this, which is exactly what I'm looking forward for in this kind of structure, which is the final excess. I'm looking at selling because I think this thing, monthly chart based, is generally most likely going to go way lower than higher than currently pricing. So I don't know for sure. That's the risk management system and stuff like that. But what we have in here is a freaking monthly signal that we're trying to invalidate. So as we've seen, the Fed, don't know the Fed. Let's call it a triad because it's not just the Fed. That will be too easy, all right? So this triad is doing anything it can to prevent the bad shit to hit the Fed. So Trump wants just the markets to be higher, all right? The Fed just wants the market not to collapse. They want price stability, all right? So they know that if asset prices collapses, then we're going to have problem with pricing and they're going to be like the problem. So they do anything they can to prevent that from happening. So they're supporting the economy. But as Trump does anything to be market orientated, this is a big problem because that what we have is a crazy fucking bubblish kind of system in which money circulates round and round in the same old areas. Which problem is we're lacking of reality right now. Asset prices doesn't nearly reflect what happens in the macroeconomical projections. And these things only happen twice in an economic cycle. At the beginning, when things are still deteriorating, but investors, speculating investors just like me, starts to buy. Other problems, other decorrelation shows up at the late stage economic cycle, which we currently are, where the macroeconomic projection starts to dampen or to reverse, and the prices still don't follow. Normally, asset prices are supposed to anticipate that. Like I told you in a previous technical video, investors will never anticipate a recession. They always wait for the reality to catch up on them. So that's the big problem. But the thing is that now we've got a different structure. We've seen investor going out just after the macroeconomic projections were down. So to me, it's been 3 quarters since I know that things are not going to be pretty ahead. This is why I stopped buying quite a while ago, even start selling, all right, speculative selling, to anticipate those behaviors. I was right. I mean, my job is to anticipate what the smart money does, all right? And let's assume that I was right. We are outflowing out of equity for 2 to 3 quarters, all right? Investors are pulling out of the stock market for 2 to 3 quarters. So I was right to anticipate those guys, and yes, that's just true. The problem is I was wrong with one single thing: the prices themselves, because price doesn't belong only to investors. Investors have been pulling out slowly but steadily. They've been just asking for profits. They're not short selling for now. They're just selling what they bought. But the opposite, on top of this, there is a huge problem. That's what explains the difference with what you have with your SPX and what you have on Germany, for example. You can see a huge difference. So what does that make a difference? People getting out in here just like they do out of the SPX. The difference in here is what we've highlighted quite a significant number of months earlier. The crazy fucking ETF bubble. Who's been creating this bubble? It's been pretty simple to me, but no one knows for sure. But I see the difference. I see the moment these things have been irrational. It's been since Trump election. Trump has been doing market-orientated policy, but the problem is I don't see investors buying it. What I see is retail traders buying it, and that's the big problem. When the retails are buying in a late stage trend, generally means we're about to reverse. The thing is that Trump doesn't let go. He keeps on lying and lying and lying and lying, and the people are buying and buying and buying those lies. So how does that end up? Either those guys will make the market, which means the smart money is out. These guys are controlling prices, and then, oh my god, it's gonna be a crazy fucking bubble, because if we leave asset prices to the retail traders, what are they gonna do? They're gonna just borrow money to buy some stocks or whatever shit this is, which means we're gonna buy for profits that will never show up. All right, it will be just the craziest fucking ever speculative bubble, but do I see early signals of it? No, I don't. We should see this in the price structure. So what I see in here is just a delay in timing, because those guys weren't expected to show up, at least not that strong, and now they are. So they're just holding up on prices, waiting for the shit to hit the fan. Is it going to happen? I pretty damn bet we will. I just don't know when. So the thing is that the monthly chart structure you've got in here facing this, I don't see a trend. What I see is a very late stage trend, probably final accessing. We could go up to 3.4K, 3.3K, but are we going to go there? Very less likely going to happen, because to me, if we go there, it's just going to be a nasty bubble. So I don't bet on this, because I don't see the underlying price structure necessary for this kind of stuff to set themselves. Now there is the weekly chart, and this is what the problem is. This is where the problem is, because here, out of the monthly chart, we said very less likely going to create a bubble. But just look at the weekly charts. That is ugly. That is really looking like a bubble, right? Not there. This is just a trend, right? Classical trend, but this. Welcome to Trump's world, the beautiful world where Trump is rising asset pricing, even though the actual macroeconomic data isn't following accordingly. So that's the big problem. Is Trump going to be the disruptive manner that just fucks up my entire scenario as it creates the biggest ever asset bubble into pricing history? It's possible. The problem is, oh my god, we also have got a credit bubble down the road. So bursting the two in the same time, like I said, is going to probably create historical crashing. So we could have a historical bubble. We're going to have historical crashing afterwards. The question is, how do you orientate your portfolio facing this? That's the actual good question. How do you trade that? All right? We can talk. The problem is, you must pick a choice, all right? Either you think things will be great because the retail traders will buy, and you rather don't want to sell if people are about to buy, right? What we trade is asset prices. What brings you gains or losses is how much we price that asset and how much risk comes along with it. That's where the big problem is. That's the reason why, to me, buying is not even an option. Either you let it go with previous buying entries, which means you partial profit taking here, and you say, all right, if we were about to have a bubble, I'd rather like to be in it, so I'm not going to sell it all. But if you don't have assets with decent prices, are you going to buy them right now? Like buying the Apples, buying the Facebooks, buying the Boeings, buying the Amazons? Are you really going to buy that out of nothing, not even the goddamn ounce of rational decision-making process? What you're buying is just overbought crazy shit. And you better hope for more craziness to come afterwards, because that's the only thing that can bring those asset prices to the upside. Even more craziness. What we can see is that the weekly chart has been going irrational. But the thing is that we've got early signs of a potential thing going out of control. What I think is just that if it happened there, I would be confident that a bubble could set itself. All I see in here is just a late stage trend who's been trying to emerge bubble. I don't see any chance we go bubble. There is still a possibility, definitely is, so this is what I'm going to be taking as a risk management. Am I going to be switching to a buyer? Not at all, not at all. I'm still a seller of this market. I'm just waiting for the actual timings to set themselves in motion. Right now we've got a bearish momentum in here in the weekly chart. We've got a monthly chart suggesting that what we have in here, look at the context boxes, gives us a 30.44, all right? Which means anything on top of 30.44 to me is a strong selling signal. Are we going to get there? We could. It's pretty close to the actual pricings we have right now. But do we have anything that can lead us there? No, we don't. We got nothing. It's damn good news. So the market takes whatever it can, like this G20 was just nothing. There's not even a deal. There is actually nothing to take as a good news. But as there's not too much bad news, we can rise. So that's the big problem. We're not trading stuff right now. What we do is that people are drawing trend lines out of their charts, like everyone has this one at the moment. And it feels like we have to go there. You know what? We have to go there because there is a trend line. Fuck that. That's not what we do. That's what we can do with 3 or 4 minute charts when we go test technical areas. Don't do that out of weekly charts. Weekly charts are supposed to follow macroeconomical projections. Macroeconomical projections all the way down, markets all the way up. Something definitely goes wrong. We know what the hell this is. All right, what is this? Still this. The risk markers like the VIX and the junk bonds clearly not following what the hell's happening with the ETF bubble we're building. So where's the big problem? The problem is here. Definitely is here. Who's supporting the market? It is not the market makers. It is not necessarily even the smart money. The smart money is asking out. So what they do is just they sell part of their profit and they wait and see. The problem is these guys, they're buying because they think we're going to go higher. Because of what? Because Trump is telling them. Do you think Trump is an economist? I don't think he is. Trump is just a bullshitter. He's a guy who talks and makes and creates ideals. All right, he sells himself as being the best and the great guys and whatever, but just like he's been holding his own businesses, what he does is creating a shit ton of credits, taking a shit tons of parabolic risk, and then when the shit hits the fan, investors will pay for it. Not him. It will say that's the Fed's problem or whatever. Trump's will just do like it does always. It will say it's not him. It will say I did everything I could to bring this up. It's going down. It's not my fault. It's the big nasty Jerome Powell who's been bullshitting. So no, the problem is Trump is bullshitting because he's creating a dangerous bubble. He's putting retails, people who doesn't have nearly a single understanding of what happens in here. They go in here because they think it's going to be easy to make money. Remember what we said earlier? Anytime you put easy and money in the same place means hidden risk and big danger down the corner. All right? That's the kind of things I want to profit from. I just don't know when. Like I said, these guys, they will end up ruined. I know that for sure. I just don't know when. So we need to handle the when. That's the big question in here. It's not if. I'm definitely sure about what I'm saying because too much examples in the past to say, no, Phil, you know what, this time it's going to be different. No, it's not going to be different. It's definitely going to end up the same way. I just don't know when, all right? And that's why you don't short sell with no stop loss. Everything has a stop. Like I said, in here, The only limit, if we end up with a bubble, is crazy fucking stupidity of those guys. The problem is those guys, they don't have unlimited funds. This is where the big problem is with those structures. You're not trading with smart money who's buying with unlimited leverages, right? In here is retail traders who are buying with the money they have, the money they spared for the savings or whatever, but whenever the savings are gone, I mean, they're all invested in the market. What are you going to be doing? You can do nothing else but just letting price rise, but when price will fall, you'll ask for the money. There will be not enough money for everyone. It's always the same old shit. And now, let's go to Bitcoins, because I think that's the funny part of it. That's exactly the same structure. But the problem is, we're trading in here with 100 billion market cap, all right? It is not nearly even quite the same with the SPX. The SPX is $25 trillion. So in here is a big difference in terms of asset valuation. So if you think this can move just like Bitcoins, no, it can. But the psychology behind it right now is just the same, all right? Retail traders catching interest into something that will exactly collapse the same way. Because when people will ask for the money, there will be not enough for everyone. So what happened recently with the Bitcoins? Let's having a look at the monthly kind of close. Not pretty. I know you liked that when we were up there. Now we do have an ugly upper shadow candle, and the only thing it reminds me is this one. So everyone still thinks it's gonna go fine. What I can tell you, all right, what I'm going to tell you right now is my feeling, first of all, and then I'm going to give you some technicals to support it. It smells a lot. It smells like shit, and I see people who don't even see this one coming. So, gonna go weekly chart right now. What you have in here, oh man, that's not pretty, not at all. Like in here was a bearish engulfing structure, in here is just a pretty ugly bullish candle who's been ended up closing negative. Right, so it was a beautiful week at the beginning. I got my stop loss triggered. The bulls just rose out of everything. They go straight to the next resistance, so straight that even I thought it was too aggressive to start selling again in this area speculatively. So I waited and caught a pullback. But now, you know what? I have good prices, and if you think I'm going to be getting out, oh no, I'm in and I'm going to reinforce. So I think we're about to speculative crash on this asset, because what I see in here is just the same old story and exactly what I warned you about. What I told you I would like to see in order to be even more bearish. I want to see the market testing technical levels, reacting just like I expect it to be, like perfectly speculative trading. I told you this area was dangerous. I just told you I'm not going to sell just right in here because I just took a stop loss a few hours ago, all right? So I just waited. But when I saw this, I instantly sold afterwards. Now I've got this trade. I missed this one as I was on holiday, but this one was pretty fucking easy to catch up on. I mean, just a freaking 15-minute chart context pullback. And what does this do? All right, we're selling the 15-minute, which means we're accumulating 1 hour. Normally, we're not supposed to accumulate in these structures unless we have a bubble. Remember that we don't go bullish trend to bearish trend, but we can go bubble to crash. So what we have in here is a pretty fucking bad sign. It means anytime we're pulling back to resistant context, they are sold. And that's not good, because when people are selling after bubbles, means we're generally having the opposite one coming along the way, the speculative crash, the dead cat bounce, and the speculative the speculative crash, the pullback, the dead cat bounce, and then the crashing structure setting itself. So what we're having in here is probably going to be looking like a speculative crash, which means generally 40 to 50% drawdown in prices, then dead cat bounce structure, 2 waves to the upside, people thinking that this is over, that we purged the excesses, and where you're gonna need to sell again. So how do you trade that? Right? That's what we care about. Like I told you, I'm not a magician. I gave you this area in advance. I told you my selling entry, I'm going to take my partial profit in here and I'm going to reinvest. The thing is that I missed the reinvestment. I was off. But I took my partial profits. I had some limit trades in here. So the thing is, we go there and it rebounces and it rejects in here and we're back to context. What does that look like? It definitely looks like an accumulation, which means I don't know when, but I pretty damn think we're going to break down there, which means we're going to break our trade out of a bullish trend, which means speculative crash. The guys were definitely not by this area. I think in here we're going to go sideways, and bam, we're going to go straight to the negative area, 5.2, 7.2. This is where I've got my limit trades. We go there, I'm profit taking, and I'm not even asking anything more than that. We'll have done quite a significant drop, all right, from 14K to there, minus 50%. We go there, it's going to be hell of a pain in the ass for the bullies, guys. Still, whenever we'll rebalance in here, if we go there, it's going to be a V-shaped reversal. So, what does it look like? People will say, no, we're fine, we're good, all right? And what are we going to do? Anytime we pull back in there, I give you my price earlier, all right? If we do this, that's an if. Whenever we'll pull back to this area, like 11.5 or whatever, will be the equivalent of the 17K back in the days. People will be buying, thinking that this was just a pullback, a very huge and interesting opportunity in prices. I don't think it is. I think we're going to have to go further than that just because we've done that to go rising. If we had done that like a trend, I would agree of this to be a very interesting pullback to buy. The problem is, we're probably, like I said, going to crash this thing for quite a significant number of months afterwards. Because what we have in here doesn't look good. Everything I have in terms of structure suggesting we're ranging after crazy parabolic schemes, price building, you can expect some speculative crashes. All right, speculative crash comes everyone to the wrong foot, which means now I see people thinking there is a pullback, that we're going to range and rise, or that we're going to highlight next target areas. I don't nearly think we do. All right, back in the days, I was honest with you guys. I said, I don't know. I have a big selling area that starts in 13.7, that goes right up to 16.7. And I told you we're parabolic shit scheming. So the thing is that I didn't know where to reverse. I told you, all right, regarding the force we have, I don't necessarily know what to do. When I saw the liquidity problem we had the other day, to me it was clear enough to go selling again. I didn't nearly hesitate a second to catch the pullback and sell it. So now we're going to see if we ever trigger this breakout, you know what the hell is going to happen. All right, it's going to be a range breakout, but the thing is that this range is going to be freaking big. Oh, sorry, not a gap. It's a neutral area. Oh, no, sorry, it's a cycle zone. Oh. So what I care about is that if this is a range, all right, big range, in which we're going to dead cat bounce and stuff like that, this is where we're going to break down. So remember what this means. Generally, the breakout area is the mid area of the range. So how do we do this? I'm going to be using like key level. Yeah, that's what we're going to be doing. So if that's the level that we're about to break down, and I haven't said we will, I said if we do break this one down, normally we're going to build a range out of the highest candle close. Oh, we've closed at the high. That's a problem, right? And we generally double it down to the breakout area. Okay, and when we do this, that gives us the same old target. 5.2, 7.2, and in this area. Consider this as a cluster, and as I said, we're going to go there straight line. All I care is that in this structure, psychology is leading price action, which means we're going to go into areas that matters and that sends a message. If we go break down these lows, there's a shit tons of stop losses. So do you think we're going to go there? I definitely think we will. Are we going to go down this one? I think we can as well. So consider this as a big area in which all the bears needs to profit take. That doesn't mean the movement will stop there. All it says that afterwards you're probably going to have a deep pullback back to the red area. So do you really want to hold the selling entries you made in here, forget about profit taking in here just to get pulled back at the same entry price later on? No, I want to load on some nice gains in here and reinvest in there with much more leverage. All right? Which means in here I'm going to sell with the free cash I made by buying myself out there. I'm going to manage my way down, okay? And hopefully this requires further validation. If we fail to break down in here, and if we retrace and break down this high, then I'm wrong, and I'm going to have to change my context. But for now, I think all I have in front of me, just suggesting way higher probabilities to fuck up this thing rather than rising from ashes. Right? Future will tell us, but that's what I'm watching for the weeks to come on cryptocurrencies. So the stock market, like I said, to me it's irrational. We shouldn't nearly be there. What we do is that we're trading trend lines out of weekly charts because All right, we want to test those trend lines because we got no clear reason to go down. Reasons to go down, we've got plenty of them. We just don't want to look at them. That's the problem, all right? So everyone wants it to go fine and to go without problems. The problem itself is that we're just piling risk at the moment. We're just piling a shit ton of risk, and we better hope and brace ourselves if the risk shows up. It's parabolic scheme. That's exactly what it is. Who's taking the risk? The retail traders who are buying in right now. I don't think the smart money is taking way too much risk right now. I don't see irrational exuberance from the rational institutional way of investing. I see institutional traders just asking out exactly what I expected them to do. What I didn't plan back in the days, that the Trump shit will work its way into people's mind, enough to make them buy with all their savings. And like I said, it's a dangerous bet because you're following Trump. And you know what Trump is, all right? Some people don't, and I strongly invite you to just learn about the guy, right? He's not the successful investor you think he is. This guy is just a liar who's taking crazy fucking parabolic risk, and whenever the shit hits the fan, it just spreads the money to investors, all right? It's just calling in for debt to whoever is stupid enough to buy that debt, and whenever the shit hits the fan, investors get ruined, and Trump does what? He says, that's not me, he just pays himself a good salary, and is making his fortune out of this. That's how he made his money. This guy is not a successful investor, he's just a stupid guy who sold dreams to whoever was stupid enough to buy them, and whenever the shit hits the fan, he's not the problem. He's just moving on to some other shit that he can sell to some other people, and that's the story of his life, ruining people one after the other, just making himself richer in the process. The thing is that now Trump has been accessing to the highest level of enrichment he could get because he's now playing with the US state all by itself. All right, he's been handling this thing exactly how he's been handling every of those businesses in the past, which means debt, 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 debt. What is the first thing he's been doing getting in the office? Tax credits. That's exactly what he's been doing. Like giving free money to the rich. That's exactly what he's been doing. All right? And he's been doing how? He's been doing by credit negative dollar assessment. All right? He's been doing a tax plan, promising money to go back in the pocket that is clearly not going back in there. The trade deficit is even increasing, so that's even more stupid that it could be. Fact-checking, speakingly, this guy is just failing, but everyone thinks it's going to be great. That's exactly the Trump's life summed up in a single sentence. The guy sells dreams, people are trusting him, they end up broken in the end, and he just says, that's not me. And he's just moving to something else. I better hope it goes along with this. But I don't nearly think it's going to do fine. If the guy ends up ruining the entire US state, I think pretty much people will get pissed at him. So we'll see. That's my story. Once again, that's what I think. That's not what I trade, unless I've got technical signal. The problem with the US is that every bearish technical signals I had, I've been trading them, but they all have been invalidated. Like what we said last month, bullish engulfing. Like we had the monthly fucking signal. That's not the kind of stuff we can invalidate easily. So I have to admit that Trump has some, is good. He's pretty fucking good at it. I think he's probably the only man on earth capable of doing that shit. But the problem is we all know how it's going to end. The guy will go too far. I think he already has gone. But the thing is that we don't know. I mean, only stupidity will limit. And the problem is Trump can go pretty fucking far as long as people are ready to follow him. So we'll see how far we can go out of every rational stuff, out of fundamentals, out of everything. And we'll see how good Trump is. Right? If Trump is just a puppet, a few weeks from now or a few months from now, we'll just be down, we'll be back to normal. And that's it. Trump will be out of this triad. He will have tried, played, that was fine, having a threesome party. But, I mean, at some point, economy will survive and Trump will just pass on by. So that's what I think. And like I said, I don't know. There is also another option. Trump takes it out of control. The Fed loses control. He puts the Fed under control. And that's the big problem. I don't nearly think that if we have a Fed under control, is good for the actual reality, which means we can't have a speculative bubble. But until then, I mean, I'm betting on Trump being put out in this triad rather than the Fed, but we'll see. All right. The question is, I don't know if the market will like a Fed under control if it ever happens. Trump is doing anything he can, obviously, to make that happen, because he knows one of those three is going to be put out. He knows is probably the most likely to be. So he's doing anything he can to save his asses. That's normal. I can understand that. Trump is not necessarily a dumb person. I think Trump is smart some way, but he has a huge problem. It's narcissism. And the problem is this narcissism is creating the actual negative aspect of Trump. Trump could have been a great investor if he wasn't a narcissist. But the most craziest narcissist I've ever seen in my entire life. Like, this guy is so blind because of his narcissism that it's dangerous to have this kind of guy running the country. So anyway, waiting for new technicals as the monthly signals we had 2 months ago is now invalidated as we managed to break the high. We holded the candle close afterwards, so now we're breaking it. So yes, the bulls have it under control. That's not, like I said, what you need to understand in here is that technically speaking, I see bearish signals nearly being invalidated, but we've been seeing this so many times in the past. Like, we've seen this happening in H1 time frame when they fucked up every bearish 1 hour signal, then the 4 hour signal, then the daily signal, then the weekly signals. Now we're fucking up monthly signal, and that's a concern because there's going to be a limit to everything. Right? This monthly signal, it was absolutely valid. Overbought, divergent structure, bearish engulfing on the monthly chart, and now we're back in here like it was nothing. There's not even a good damn thing to come out of here. The macroeconomic projections have been even worse. So 2 months from now, nothing has been increasing. The Fed's projections are still 1.3% GDP for the next year. So that's just crazy as shit. All right? What we're doing here cannot make any sense. So if you're trying to make it rational, it's just going to drive you crazy. So what else do we have to do? All we can do is just trade what we see, which means at the moment, everything I see is just invalidated because of this dangerous triad game. But let's be honest, I'd rather like to say, don't buy that shit. Wait for this. There's only 2 options to terminate this. Either we're going to have a signal that is going to be validated and pushed through, which means we're going to directly fall like shit and catch up on what we've done, which means we're not going to find any support in there. If you think this expanded wedge structure that everyone has on its charts right now is what it's going to be, like we go in there, all right, we find some bears, and then we go there, and then we go there, right? That's the plan. I mean, that's beautiful. That's logical. Believe me, if there is something I've learned out of my years of experience in the market is that anytime I see people having the same scenario, it never goes along. So if the goal is to go there, but first to go there, normally we're going to go there straight line, which means we're not even going to do anything like going in there first and there. All right, if that's what the end game is, all right, we go there straight line. So what we have right now, I think, is a concern. So am I going to be selling this area? I'm going to tell you right ahead. No, I won't. I won't be selling this area because if we go there, I know it's not going to go according to the plan. All right? I told you where I will be selling. I told you I would be selling this area, which is the 127 retracement of this thing. So this is the area I'm ready to sell again. All right? Unless we go there, I'm not doing any fucking thing with the SPX for anything that happens in between. All right? This area, everyone will talk about it. Everyone will try to trade it. I don't want to put my hands in the dirt in there. All right? If we get to validate the bullish gap we've had, all right, which means we're trading with the futures right now. The cash market itself hasn't been opening yet. This afternoon will be very important for Wall Street. Nothing allows us to go there. Nothing rational. But let's be honest, the market can be irrational. So if it happens, if Wall Street's buying this afternoon, like I said, I mean, I'm not trading this shit. I don't have any selling entries on the SPX because I kind of don't understand this thing. I don't know what the fuck we did pulling back in this area. I tried to sell in here. That's the only area that mattered to me. Now we're bullishly extracting out of here. You know what? I don't give a damn. I'll let the DOMs trade. I'll just wait for the moment they'll go too far. If that's it, if that's today, what is it going to look like? If we fill the gap today, which means we're going to gap up, all right? Current futures market is 29.74, so we're here, all right? We're gapping up in here. If this gap is filled, which means we're reverse out of the gap, all right? Today we're going to have new context boxes. I'm going to give you, I've been talking a little bit too much, so let's go straight to the essentials, all right? What is it looking like? All right, to me is we don't nearly give a shit about the plan, about the trend lines. Too much people have these trend lines, so I don't think it's going to work out. If we go there, we're probably going to go higher. Or we just don't go there, which means we make believe everyone that we're going to go there. We stay there for a few days, bam, we shoot a huge reversal, and we go straight line to the downside. Not even with an hesitation in between, all right? Like I said, we already tested the moving averages, which means if you think there is going to be a support in this area, it's not going to happen. What I'm going to be doing in here is just risk managing, like 25 profit taking or whatever, just going to cause some pullbacks, but doesn't nearly going to reverse. All right? So now we're doing a single shot. That's it. We're going up, and anything that goes, that doesn't go along the plan can probably reverse stuff, and there's going to be no pullback. All right, that's what you need to understand. Now everything must go according to the plan. We need to have a deal. We need to have a problem solved with the IRN. We need to do everything well. It needs to be a perfect shot, because now we're historical trading. Anything that doesn't go along to the plan will make this range mature, which means next time there's going to be no support. Like I said, I don't think there's a support in here. I don't nearly think there's a support down this trend line as well. All right. We go down, it's a single shot down to the support area, which is pretty fucking lower than what we're currently trading. Okay? Still the same plan to me in a monthly to weekly basis kind of stuff. Medium to long-term investment is definitely not a timing to buy. It's a timing to short sell speculatively, so tiny portion of your capital, very cautious, and if it goes wrong, you get out and you enter again. You rather like to be proven wrong 5 to 6 times before catching up the actual 6 good time, rather than holding on to your selling entries. If you're holding on to selling, you're definitely getting it wrong. The most rational stuff to do in here is that if you invested back in the days, back in the trend, it is definitely about time to lock on some fucking gains, but normally this has been done already. So what do? Normally I told you to profit take in those areas, so you should have done that by now. So what else do we have to fucking do? I stand for this. I think we've got nothing to do but just trying to short sell or do nothing. If you're not short selling speculatively, I don't see anything else that you can do but just looking at this market. But looking means not trading, so if you're not trading, what the fuck are you looking at? That's it. That's what I try to make you understand in here. There's just one thing to do right now: short sell. Be aware that this is very dangerous, as people don't want this to go down. All right, but that's all we got to do. All right, but when you're selling, you need to sell something. I told you about this signal. All right, we've had a daily signal in here. Apparently, this one's failing. 2 days candle close might be invalidating it. But if we just reverse out of here, which means today Wall Street is selling instead of buying, and we're closing lower, and what is it going to be? I'm selling instantly. If we reverse today, I think we'll still be trading this bearish signal. That's not the kind of thing I want to be buying. If we keep on rising today, like I said, I'm not doing any fucking thing unless we get in this area. Okay? If historical highs are bought today, if we're building a support out of historical high, I think we're going to go to this area. Not even going to trade this one. All right? So that gives you kind of a cluster. Either we reverse out of today or the next 3 to 4 days. Let's call it that way. All right? If 2 days gap is still there when Wall Street opens, because let's be honest, it's still 2 to 3 hours before we get to open, we could flush out this thing and get to open negative today. That's no big deal, right? Can be done in just half an hour. It is nearly even 1% upward. So, all right, and then other big market we need to figure out, the dollar. Now let me show you what this looks like. All right, monthly candle close. Oh shit, that's not good. That's not good. Bearish engulfing, straight line, opening at the highs, selling, closing at the lows. After two monthly upper shadow candles, which means after 2 months of hesitation, we get the signal, to give the signal. still, is that really an undisputable signal? I think there is still some potential dispute to come out of here. The problem is, in a monthly chart, to me, it comes along a bearish signal, a bearish cycle, right? Sine wave in the monthly context is bearish, so we're in a monthly bearish cycle. The momentum is bearish as well, so if we're building a market top in here, which this candle might be suggesting, then just look at that, all right? Divergent market top. We go back to neutrality, but instead of finding some support, we find some resistance with lower highs. And next time, we're going to have price and momentum accordingly, which means we're going to go to oversold areas, which is this area, all right? We're probably going to go close to this, and normally we're even going to go lower than that. So you might expect a momentum going below 95. What is it going to look like? That straight line down to context. That's what I think is gonna happen. The problem is, it's still a little bit too soon out of the monthly chart to make this happen. Because just have a look at that, alright? Even if this candle is pretty fucking ugly for the bulls, we still break no supports. Alright? The momentum is still positive. We're still trading 12 on the momentum. So technically speaking, we've got negative forecasts, but is it about time to go, we won the battle? I wouldn't nearly say that. In order to win the battle, we need to fuck up this support. Like, this is the latest support we've had. If we don't go there, and if we don't break this down, alright, and if we fail to break the previous month low, like for example, we do have an inside bar in here. I wouldn't like that. What I want is a candle looking like that, so we can retrace earlier this month. I see no big deal with that, but normally we should close below this low, and if we don't, we need to at least make a lower shadow candle, and we need to test those levels. What does that tell us? In a daily chart, tells us that, to me, every pullback we've got in here is something I'd like to sell. I see no bullish signal in here, which means this, if it holds today's candle close, I'm going to be selling anytime we're going to break this one down. So let's call it that way. If we rise from there, anytime we go back there, I'm going to be selling the dollar. Like, this is a false signal. Any bullish signal that gets invalidated is a bearish signal to me. What I want is for us to get to this area, or even lower than that, because that's where we're going to get to trade the context. The problem is, look at this. We failed to break up the context in here. We rejected the bearish resistant context. I think that's exactly what tells me that we're going to break the bullish context. All right, we're not going to find support in this area. We're going to have to go lower. So I would say, like I said previously, minimum to me is 93, 94 for this month. All right, so I think in the current month we're probably going to go there. Probably going to build a dip in here, kind of retrace or whatever. But normally, this is where this month is going to find support. Okay, what does that give us for the massive, for the major forex pair heading into dollars? So they're all pullbacking earlier. Right now, all right, but what does that mean? It means we can retrace. Yes, we can, but normally we're going to go higher. And in terms of euro dollar, it means we're going to normally try to get to the low volume area, which is the 1.15. Normally we're going to break this one up, so we're going to have to go right there. Normally 1.16 or 1. I would say this volume area is what actually makes sense to me. If things are getting out of control, which I think will be, straight to context. Very less likely to me, but these are the two technical areas. Either we go there and we're lacking of bears, which means we go there and I know it doesn't go along. We're reversing this area. This low volume area acting as a resistance. That's a possibility, all right? We're just lacking of bulls. This is the cluster area, all right? So either we go closer to this area and we don't find enough strength and we'll have to pull back, probably back to 1.1250, something like that. Like this previous bottom is probably going to act as a strong support, like finding a resistance, lacking of supports, and we're going to have to pull back this area. All right, that's the first probable scenario to me. Second option, we go there, no bears, bam, straight line to 1.18, and we're going to get to fuck up this area in the process. All right, that's a possibility. I don't think this one is the most probable. I rather like to say this one seems to be like getting to reverse, let's say on top of 14.5, 1.14550. This area, I think, strong reversal because we're probably going to lack some bullish potential in here. but we'll see. All right, I see some bullish potential still at the moment in the euro dollar. What we have in here doesn't nearly even show a bearish signal. This is not even a divergence. Like it's almost the same level. So it's kind of a double top on the momentum. So I still see, all right, we go sideways in here for a few days, and normally we should find some bullishness afterwards. All right, so what I think at the moment is just either risk managing, which means partial profit taking or whatever, but I don't see any reversal early activity in the dollar pairs, major dollar pairs like the GBP or whatever. We've seen that GBP could have some sharper and deeper pullbacks, but normally we're done with this area. Like we can build in head and shoulder or whatever the fuck this is going to be. I think we're not going to go lower than that. Right? We tried hard. I mean, they tried so hard to pull us down. I don't think it's working. All I think right now is that instead of it, we're getting straight to context. So I feel like euro dollar, GBP dollar, whatever the fuck this is, whatever happens in the euro area, whatever, I think this is what's coming next. All right? It just needs a momentum. Just needs to find its way up. But I think throughout the summer, something will go ugly with the dollar, and that just leads us to the actual conclusion: VIX. All right, to me, the most profitable trade to make in the forthcoming weeks, if you're a midterm investor, a midterm to long-term investor, is this. Remember what we've highlighted in the previous podcast? I told you, all right, there is a scheming, there's a pattern throughout VIX. Anytime they do this, like they're having some forcing us to risk take. All right, that's what brings the stock market to the upside. Anytime they do this, they follow the same rule. They follow the same structure. And every time we've seen that anytime they try to make it work, they make it work, but in a shorter time scale. So anytime they build a cycle, the next one is shorter than the previous one. So you can be sure about one thing. This cycle, the next one is going to be shorter. So this one has been lasting, it's been starting in here, it's been topping up in there. So it was, December 2018. Do you remember this one? Hopefully, obviously you do. So the next one was May. So it was 4 months, all right? Or at least, I'll call it 3 months and a half. So how long do you think the next one is going to be lasting? Far less than that. So that's the reason why we said, in a technical anticipative manner, 1st of July is where things could start hitting the fan. Still, there is a scheme, there is a structure with those bearish manipulation. When people are pushing investors toward risks, this is what we have. Remember that we've said that every time we're building a triangle structure, right, we're fucking it up, like we go in sideways and then bam, this is where the market is being manipulated. This is where we've got monetary injections or a dovish accommodation structures, speeches and stuff like that. What has been happening this time? Exactly the same old fucking structure. Look at this, all right? So let's zoom it out, all right? This is where our beautiful trend line was, all right? What's been happening in here? Power. So exactly the same scheme. So this is this, the sideways area where we go down. So down is this. This is what we're experiencing right now. Sideways activity, but normally we get to break down the slope. All right? That's important. The low we build after the kind of somehow the manipulation, remember this, Powell as well. Powell, every time the same timing. So there is something in here, and I would like to say, I don't know if anything unexpected is going to fuck up this beautiful scenario, but all I'm saying is that anytime this structure will set itself, whenever we'll get something like this bottom in a short-term in the short-term scheme we'll have right now, oh man, ooh, yes, I'm going to be buying. So I'm waiting for this. I think right now we're going to go sideways for a bit. Like I think in here we're probably going to go rising or selling. There's going to be a bit of a new selling afterwards. Right? Something like we try to go there, it doesn't necessarily work out, or we can make a tiny lower dip. We're going to rise afterwards and then, all right, something like that and that. I think it's going to be shorter than that because it has to go faster. So I would say, all right, today we're probably not going to find the bullish support we think. We're probably going to go sideways in here in the next few days, go bearish afterwards, build a dip, and then whenever we are in this dip, let's be honest, I'm going to give you my price. Anytime we go to this area, because have a look at this. The other structure is this. right? We build a support in here just like we've built a support in there. We always find support when we just slightly break down this level. So where I think is the buying price, and I'm going to be very precise in here. Like I give you the price I'm going to be buying on the VIX, and I'm not going to buy it tiny. This time I'm going to take a huge position sizing, simply because it is so precise, and the stop loss is going to be so cheap, and I'm going to go in here with quite some leverage. I'm taking risk. I'm going to probably risk 1% loss on in here, but the stop loss will be so narrow that the position sizing will probably be more significant than an average price, than an average sizing, right? Obviously, that's for aggressive traders only, so every beginner in here doesn't nearly follow in there. For the Discord guys, this is I'm talking to the orange guys in here, right? But you must want to trade this price with me normally. If we get there, you want to take some significant position sizing. Yellow guys, you'll try this one out, tiny position sizing just to taste the temperature. Anyone in here being a green person or just a beginner, please, you don't even put your fingers out there. That's way too dangerous. All right? Only I risk profile in there, but there is definitely, I think, probably a a very easy trade. It's a hidden trade, all right? So just the speculators will probably take this one, but just put a goddamn alert in here. Anything this one triggers, take a short trade. Take a short trade on equities and take a long trade. Yes. Don't get me wrong. Take a long trade on volatility, but now figure this out, all right? This structure then builds a bullish volatility when the stock market still is rising. You need to understand that. That's really important for you to get it. All right, let me just bring in the SPX. All right, see this? All right, this is where we topping up on the VIX, or we're bottoming up on the VIX. The stock market gets a little bit more bullish, and then the shit hits the fan. That's exactly what I think it is. We're going to go bullish in here, we're going to start rising, and then bam, something ugly is going to show out of nowhere. All right? But I'm not ready to anticipate the selling activity in the US stock market, or I will only if I have early activity signals and stuff like that. What I want first is these pre-signal. Either something goes out of control, we've got a black swan, or I want to see this VIX structure terminating itself. I want to take my buying entry on the VIX, and only then I'll be ready to eventually start selling again upon some bearish signals on the stock market. All right? Regarding the dollar, just like I said, I'm waiting for further information because I'm already leveraged in these markets. Those who are not, you can take those early pullbacks as potential bearish entries. You just do as usual, which means you freaking risk manage. You don't take a trade because you think of whatever is going to happen, right? You always put something in context. So let's assume you want to buy, right? Remember that that's how you build a trade. You need to know what you're going to be doing. Either you want to buy or you want to sell, but you need to know what you want to do. All right? You build yourself a personal conviction. What you think, and like I said, what you think can be the opposite of what I think. I don't nearly give a shit. What I care about is for you to always follow the same structural path that leads you from the thinking to the actual decision making. And what is this? It's what we call the strategy. So you want to buy, all right? What can you buy this context? Yes, you can, but this is where you buy. So if you want to buy 1 hour context, then you wait for 1 hour support context, and you do nothing in here but waiting, because what could it be, right? It could be an accumulation. So what are the two options in this market? 1 hour context, either you wait for price to go there and you'll have a 1 hour buying entry possible signal. Second option, we're just accumulating below resistance. There has been no breakout. There's already has been a breakout. So this is where we got the breakout. Okay, clean breakout, pulling back. So I would say, I don't know what this is, but I think there is still a little bit more gas. There's, like we said, going in there, but I wouldn't go higher than that. All right? I think we're probably going to fail in here. All right? So in here, what it says is that we've got this area and we've got this one, which is probably what I care the most about, which is we go there, I'm profit taking, I'm reducing my leverage on euro dollar, right? Upon signal, of course, but getting in here, I'm probably going to profit take a bit, like 25% profit taking, no more than that. Now, if you want to buy, you can't buy in here. The buying entry is way lower than that, so you have to go shorter time frame context. Can you buy in here? That's how I do trade, guys, all right? I know what I'm going to be doing. I'm just looking at something that makes it viable. Risk managing viable. What do you have in here? Yes, beautiful range, all right? So range, all right, how mature is this range is the question you might want to ask yourself every time. All right, so let's play the game. Oh, sorry, that wasn't what I was making. I don't know. I hope I haven't fucked it up. So anyway, so first range boundary, sorry, I'm gonna need this one. So first range boundary, second, third, tried one in here. I wouldn't call this one valid, but yes you can. So it looks like that, right? So it's a 6th range boundary. So can you trade that if you're a beginner, if you're white people in the Discord? Can you trade that? Obviously no. If you're a green people, I would say you can eventually try it out, but it is dangerous though, so you're going to trade that minimum leverage. You're a yellow person, you know how to risk manage, so yes, you're fine to go with this one. Alright, sorry, I'm going to have to move on. Yes, like I said, 6 boundaries, so if you want to buy it, you buy it, but experienced traders only, you know how to risk manage, otherwise you don't get your hand on the dirt. Otherwise you just wait for an accumulation, so like waiting for us to get back to context, pulling back trend channel, context and breakup is what you want to be trading if you're a low risk profile. You know where the profit taking area is. You can just partial profit take and that's it. So right, bullish bias I think is the most rational one to do. Only experienced traders can buy this area, otherwise you wait for the bullish breakup. I definitely still have a bullish vision on the dollar and whatever this is. I think these are just early pullbacks we have. Same thing goes for dollar, yen, whatever. So just think straight and simple. If it comes to cryptocurrencies, what are the forthcoming risks in a daily and weekly basis? The risk is this huge speculative crash, which means even if you think it's bullish, it's going to recover, it's not. Or we're going to have to build a dip right now, like not breaking down the 1 hour context and rise from current prices. If we do this and build a strong support out of 10.7k, then I'll have to review my scenario and we're probably going to have to dive higher into the resistance area. Regarding the stock market, it's just absolutely unable to read, so I suggest instead of that you watch for early pattern completion in the VIX instead, and just stay the fuck out of SPX until then. Don't try to understand this thing, it's just stupid as hell. Don't try to make it rational, don't try to trade it, just wait. I think the only trade is to be done with the VIX. And regarding forex, which means gold included and stuff like that, it's just all related to dollar. I don't nearly think the dollar is bullish. All I can tell is that yes, the last month's bearish signal is closed. It's not good for the bulls, and they probably gonna do anything they can to prevent this from going any further. So I expect some support in the dollar. I just think this support is gonna be weak, which means I don't expect this to be a reversal area, more likely just a pullback area. So this is why you don't want to forget about partial profit taking in the euro dollar and GBP USD if we do have some signals suggesting to do so. A euro dollar, as for example, is probably going to be in this area, and if we get to cross this area, don't even change your mind. All right, we can cross this area, it's a cluster. I don't say we will reverse in here, I say we can lose steam out of this area and require some deeper pullback down to 1.12. So we rather like to profit take and buy again the pullback. All right, just to risk manage and load up on some more bullishness. All right, that's how I'm going to be trading this. Just partial profit taken in there. All right, don't try to sell this area. You can eventually, if you have a bearish bias on euro dollar, I would understand that, but then you risk manage obviously accordingly. The context you're going to be using to do this is anytime we break up the 1 hour context, if we have strong bullish selling signals like exits and stuff like that, you can try selling safely. If you're a bear, I would understand that. I myself am a bull, so in this area, upon signals only, I'll profit take partial gains. That's it. Bye guys, tomorrow morning we'll do another show, but not on the monthly basis, we're going to do quarterly basis. So tomorrow is going to be a real long-term vision of the markets because we do have a quarterly close that is now on the chart, so we're going to just analyze it to see what we have and how we can dampen our expectations. Bye guys.